Hey guys, Dave Keller here with Market Misbehavior. Markets have been certainly choppy, a lot of uncertainty, a lot of volatility recently. A lot of key technology names have certainly been showing price weakness. A lot of the stocks in the technology sector, XLK, the communication services sector, XLC, and established downtrends. But big mega cap names like Apple, Microsoft, and others have been managing to hold up much better than others. However, Apple is very close to a key line in the sand. I'm going to share with you what that level is and why a breakdown could be an incredibly negative signal for the market. So today it's all about the line in the sand for Apple. So I learned technical analysis first in the early 2000s. I joined the industry in June of 2000. My formative years as a technical analyst, as a new market practitioner, were during the end of the tech bubble, the popping of the tech bubble, and basically the 2000, 2001, 2002 period, which was super challenging, super frustrating. You had 9/11 in there, which was a tough period, obviously, in New York and elsewhere. So I learned technical analysis and essentially was taught how well it helped with risk management. For me, learning the practice and learning the technical toolkit, it was less about shooting the lights out and hitting home runs. It was more about managing downside risk because that's what was happening. All these technology names rolling over. Finding a lot of similarities now, to be completely honest, with what I saw 21, 22 years ago, as you saw the end of the tech bubble, and you saw a lot of previous leadership names in growth sectors starting to struggle. We're going to focus today on the chart of Apple and talk about a key price level to pay attention to. Before we get to the chart, though, this sort of thinking about market history, market dynamics, investor behavior, and technical analysis is of interest to you. I hope you'll subscribe to my channel. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Finally, put a comment below. What do you see happening next with Apple over the next 1 to 3 months? Let me know in the comments below. Let's get to the chart. So we're looking at the chart of Apple here, and I should point out in one of my recent videos, I got some questions about how to learn technical analysis. I'll make a point of digging into that topic in a little bit more detail when I can. For now, though, in the description below, I have a link to my recommended reading list on my website, marketmisbehavior.com. So check that out if you're trying to learn some of these tools in greater detail or upgrading your own technical game. We're looking at the chart of Apple AAPL, and we're looking at the last 2 years. And this is helpful because we're bringing in the March 2020 low, which for many stocks was sort of the bottom, the sort of the beginning of this move that we're in. Now, if you look at what Apple actually did, had a good run from March of 2020 to the beginning of September of 2020. Look at how the relative strength, Apple versus the S&P. Look at how that's sloping higher during that period. From there, though, you can see September, October, November. This is when most stocks were in a consolidation phase. This is when the S&P 500 itself was in a consolidation phase. The S&P broke out in November and then continued on, and much of 2021 was new highs for the S&P 500. Some occasional pullbacks, but 2021 was an incredibly strong year. Look at how much of 2021, particularly the first half of the year, was actually pretty flat to down for Apple. Apple made a new all-time high in January of 2021, and then it took another 6 months or so before it made another new all-time high in July. That's why the relative strength line slopes downward during this period, because other stocks were just in much better uptrends. Toward the end of 2021, you start to see some improvement. You start to see some breakouts. And when Apple broke above 155, which was this purple horizontal line, that was the high in September. We broke above it, retested that from above, and then made a push into the end of last year to make an eventual all-time high in January. That's when the stock really started to outperform yet again and re-exert its leadership. From there, that's been it. The high water mark for Apple was in the first week of January. From there, it's actually been in more of a consolidation phase with lower highs and fairly consistent lows. And this purple line is an important one to look at. And it demonstrates a technical concept called polarity. Polarity is a concept in technical analysis where a price hits a high, a resistance level of some point. Later, that level of resistance becomes support. So we always talk about how the market has memory. Certain price levels tend to be significant. And I would argue the reason is because a lot of humans will look at the chart to identify key turning points. If a lot of people bought or sold at a certain level, that's an anchor point for a lot of individuals. And a lot of models, quantitative models and algorithms are driven off those levels as well, because they're trying to quantify or trying to model the behavior of those emotionally driven investors. So price support and resistance tends to be a pretty safe bet. And in this case, the concept of polarity illustrates how resistance around 155 occurred in September of last year, and now that has become support. I have another video in this on my channel, particularly dealing with polarity. I'll put a link in the description below if you want to check that out. So what's happened now? After breaking above 155 in November, the stock got above 180 and then sort of faltered, trying to get above 180 a couple times. That's really the top. From there, came down, bounced off of the previous support. And then this was a key moment for Apple and many other stocks. This is when I think the bearish environment started to become a little more evident. A lot of stocks had already sold off a lot more than Apple, but look at how Apple, instead of regaining the previous all-time highs, was unable to do so. So Charles Dow, over 100 years ago, really the father of technical analysis, taught us that an uptrend is a pattern of higher highs and higher lows. A downtrend is a pattern of lower lows and lower highs. So if you want to track when a stock had been in an uptrend and is no longer in an uptrend, look for higher highs and then highs that are no longer getting higher, right? The stock attempts to make a new all-time high and fails to do that. So when Apple tops out at 175, that's a telling moment in terms of the price behavior of the stock. Now we're right back testing support at 155. So what's interesting is this had been a resistance level in September of last year, support in November of last year, January of this year, February of this year, and now about a week ago, bounced off of 155 a number of times. So this is a level that has been confirmed a number of times by Apple's investors. And if it gets below 155, that's where you have to start thinking about further downside potential for the stock, because an established level of support would no longer hold. Instead of making stable lows or higher lows, Apple would now be making lower lows. And if Apple transitions from going in an uptrend to now making a lower high, which it already has done, and a lower low, which a break below 155 would confirm, that's a stock in a downtrend. What's interesting about this line in the sand here is that it lines up with another technical approach, the 200-day moving average. We can argue about why 200 days is a good measure of anything, but I will tell you, having worked with a lot of institutional investors over time, many of them look at the 200-day moving average as a main gauge of trend. Is a stock above or below its 200-day moving average? It's a really simple question. Apple's only hit its 200-day once since the March 2020 low, and that was in May, June of 2021. Look at how it bounced right off of that level and moved to new high. So if we would break below 155, that would also take us below the 200-day moving average for the first time since April of 2020. So a break below 155 is the level I think that I and many investors would be watching. So the question then is, what happens next? So then you need to look left on the chart and see where we found support before. We can also use things like Fibonacci analysis to try to identify some potential support levels. So if I take the March 2020 low and the January 2022 high, 38.2% of the way down is just around 133, which would be another, 23 points below the current levels as we're recording this on Thursday afternoon, Thursday morning. Also, I would look at the previous level of support here in October, which is around 140, 139. So if you look sort of that 133 to 140 range would be the low from October of last year. Also, the 38.2% retracement levels, that's a reasonable downside objective. What's also interesting about that is if you take the height of this pattern from the January high to 155 or so, and take an equal amount down, it takes us right around to that 133 level as well. So a lot of indicators pointing to that as a potential downside target. What would tell me that the bearish thesis is wrong? Two things I would point out. Number one, we get back above the 50-day moving average, get to a new swing high, which would break that pattern of lower highs and indicate an influx of buying power. The RSI remains in a bearish range in that it remains below 60. If you would see the stock rally and have the RSI get above 60, that would indicate enough of an influx of buying power that the downtrend most likely gets alleviated. There's enough demand to potentially push prices much higher. But at this point, all eyes on 155 and whether that level of support actually holds. So there we go. We talked about why 155 is a key level of support for Apple. It draws on the technical concept of polarity, also using the 200-day moving average to identify a key trend measure a lot of long-term investors will be looking at. We can identify some downside objectives if we break 155 by using previous support levels, also Fibonacci retracements. And we also have a good exit strategy if we're thinking negative because we can identify with price momentum and price resistance levels at what point Apple's downtrend would most likely be alleviated. This sort of thinking about market history, market dynamics, investor behavior, and technical analysis is of interest to you. I hope you'll subscribe to my channel. Also, give the video a thumbs up if you liked it. We'd very much appreciate that back. Finally, put a comment below. What do you see happening with Apple over the next 1 to 3 months? Let me know. From everyone at Market Misbehavior, I'm Dave Keller. Stay safe, be well, talk to you soon.